Good morning everyone and welcome to Morning Markets from True Potential on Monday the 15th of April. Today we'll look to the week ahead but also add some context to the events over the weekend. Firstly, this morning I wanted just to focus in on how asset markets performed in the US on Friday. We did see some weakness in equity markets and strength in the US Treasury market. That was very much driven by rising concerns about the geopolitics, the tension that currently exists really in the Middle East between Israel and Iran. Over the weekend we saw that further escalation come through, but it's pleasing to note that in asset markets this morning it's being dealt with, it's being reflected. And I think that's an important consideration because asset markets have to deal with political volatility, geopolitical volatility. It's part and parcel of investing. But when we look at Friday, how asset markets perform, that strength in treasuries is an important component of multi-asset portfolios. I think the other factor influencing equity markets on Friday in the US was certainly the results we were getting from the large US banks. And they're just really reflecting that ongoing change by their consumers, their customers, who are seeking out higher interest deposits, higher interest savings account. And that's just shrinking the margin that they can earn between the interest rate that they charge on lending and the interest rate that they provide to their customers. It's just a natural phenomena given interest rates have moved up. If we look then to the week ahead, there's certainly quite a number of key data points that we'll be looking at. Primarily, I think, really focusing in the UK in the first instance. We have got data on the jobs market, we've got inflation, and we've also got retail activity. Those are all key areas of importance for the Bank of England, that interaction between employment and wages and inflation, particularly services inflation. Expectations at the moment are that we would see the MPC look to reduce interest rates probably in the early summer. That's certainly what the market's pricing. The data over the next couple of months will really help cement when that interest rate reduction can come through. In the US, it's very much really about activity at the industrial level with industrial production data, but also from the consumer with retail activity. Probably the more important aspect in the US will be that ongoing release of quarterly results, looking for trends from major economies across the major companies across the majority of sectors to deliver information on employment prospects, given the relatively low unemployment rate in the US, I should say, but also their hiring plans, their investment plans for the future. Over in Asia, it'll be very much about Chinese data, looking for some GDP numbers, and also in Japan on inflation, on CPI on Friday. I'll leave it there for today, but please do join the team through the course of the week when we'll be looking at the events that are shaping how asset markets are performing.